Our call of the day suggests caution should be the buzzword until inflation and recession fears are on the front pages. Technically, downside risk for Nifty seen at 17,457 to 17,771 zone. Well, if first few trading days at Dalal Street is any indication, then it appears that Indian investors are more pessimistic at the start 2023. The negative catalyst, Federal Reserve Chairman Powell remains unimpressed with the reduction of the rate of inflation, down to 7.1% in November, from 9.1% in June. The Fed's consensus desire is to increase their forecast for the Fed funds rate to 5% in 2023. Please note, the ongoing 500 bps of rate hikes is in just 1 year, while during the Great Recession it was just 425 bps of rate hikes, and that too over the course of 3 years. Well, this indicates more pain for stocks in the near term. Overnight, speaking in Sweden, Powell said that price stability is the bedrock of a healthy economy. Long story short, caution should be the buzzword even for permabulls, as long as Nifty stays below 18,265 mark. Global cues are neutral. In yesterday's trade, FIIs sold shares worth Rs 2,109 crores. DIIs however bought shares worth Rs 1,807 crores. Fando options data suggests Nifty's range of 17,500 to 18,500 zone. India VIX is trading sluggish at 15.51 levels. Nifty PCR is at 1.16. Bank Nifty PCR is at 0.93. Nifty's outlook for the day, volatile and choppy. Market breadth for the day likely to be negative. Sentiment for the day likely to be precarious. Nifty's technicals are suggesting weakening momentum. Nifty CMP 17,914. Nifty's biggest intraday support seen at 17,771 mark. Biggest Nifty hurdles now only at 18,089 mark. Nifty's range for the day is seen between 17,750 to 18,050 zone. Bias for the day is negative. Bank Nifty, CMP 42,015. Bank Nifty support seen at 41,567 levels. Major resistance at 42,674. Bank Nifty range for the day at 41,500 to 42,500 zone. Bias for the day is negative. In yesterday's session, Nifty slipped hard from 18,100 levels to end way lower at 17,914 levels as investors weighed hawkish comments from two US Federal Reserve policymakers that countered hopes that the US Central Bank might dial back its aggressive monetary tightening. Overnight, the 10-year US Treasury yield spiked to 3.573%. The 2-year Treasury yield was last pegged at 4.253%. FII's relentless selling too continued. This January month, FIIs have already sold to the tune of Rs 10,126 crores. Oil prices seen climbing to $75.50 a barrel as China opened its borders for travel for the first time in 3 years as part of its new policy on COVID-19. Investors are looking ahead to a busy few days, including Infosys and HCL Tech Q3 earnings report on 12th January and Wipro on 13th January.